Hi, welcome into this Uplyft Capital review where I'll be showing you how to get up to 500,000 in very fast business funding so you can continue to build, grow, expand, and even get out of a tight pinch. My name is Michael with Viral Funding Solutions. Let's jump right into this. Now, Uplyft Capital is a bit unique how they operate. They function as a direct lender as well as an online marketplace. Perhaps you've heard of these types of marketplaces in other locations. So in a similar sense, that's how it can operate. And I'll be getting into the type of programs that they offer here in just a second. But if you're one of those business owners who's strapped for cash, who has a growth and expansion project, or just needs funding for business operational reasons on top of growth and expansion, then this will really help you out. And if you're a startup business owner, just keep listening as I'm going to get into how you can get startup funding with 0% interest for 6 to 18 months, as well as what other options are on the table. We're looking at the homepage right here, business funding. That's what they do. They can provide you with working capital with their funding platform and team of professionals. You get a look there, and we'll go into the services in just a moment. You can see how they're going into their different options and how they're differently set up, how they make things simple for you, easier to work out. For small business funding, we want you to be able to apply very quickly, get a decision the same day, see the funds show up in your bank account, and it can take as much as 1 to 2 days or so, even possibly less time than that. And what they service are products like merchant cash advance, lines of credit, and SBA loans. And I'll be touching upon what those are if you're not familiar with. Maybe you've heard of them. You just need a little bit of a reminder of what they are and how they operate. But over here, you see easy sign up, simple online application completed within minutes, same day decision, easy and fast. So you can focus on running your business. Fast funding, funds are automatically deposited into your business account the same day. Bad credit, bad business loans for bad credit are there. They're available. In fact, they may not even require a credit profile, just a certain amount in revenue that I'll be getting into here in a moment. And you just have to understand how they operate. Like I said, direct lender partnership, and they also have the online marketplace, which I'll be showing you here in a moment. If you're not familiar with my work, I'm a business loan broker expert, and I know my way in and out of every lender out there. One new one comes up, I'm usually on top of things, and I know what's happening. And I have the best team of lenders and underwriters myself. So I'll leave you more information down below as we move forward, as well as a questionnaire form to get in touch where you can get a very personalized and customized email response on your best funding option and options, thoroughly broken down. It's amazing stuff. It's very helpful. A lot of people have been going through it, and you'll get to see what's the best solution for you. If it's not this one, which one actually it is. So Uplyft Capital, they are legitimate if I haven't even answered that yet, but they work with a variety of business types. You can see on the screen there, construction, auto repair, wholesale, and it goes deeper levels than that. And they say we do business financing differently with more options tailored for you and having the right guidance to keep your mind at ease and quick decisions focused on more unsecured financing, not backed up by collateral, unless it were an SBA type of setup where collateral is then asked. Not always does an SBA loan need to ask for, or they will usually ask for, but do they require collateral? Usually cash flow is top of mind. And I'll touch upon the SBA loan, but I've created a lot of SBA content on the SBA 7A, 504, and other programs that I'll link you to down below in the description to see if you even qualify for those. But if you don't, these are great as an alternative. And even if you did qualify for those, as to tell a lot of individuals, their situation is different than yours, but it makes most sense for them to start here, especially if they need bridge funding before they get an SBA loan. And there's a lot of ways of looking at this. So get it together. As you can see there, just a few other things on the screen, the Uplyft Capital portal, and just a few things that's going through the funding overview. As you can see a few numbers there. And we'll go over here, Asinon, CBS, NBC, USA Today, Fox. So they are reputable, trusted by many. Tim and Kevin are an amazing duo to work. We're super helpful for them. From initial contact through funding, everyone at Uplift Capital was helpful, top-notch professionals, and handled every step of the process with us. Tim and Kevin are an amazing duo who are super responsive and push to help us get the funding we needed fast. So you're seeing that people are saying great things about them, but you always have to be careful. Even with those who have reviews, there are also the downsides to things, and a lot of people probably are misled to believe how they would actually help them, or they just didn't read enough information and educate themselves enough. So sometimes you have to be careful about taking the good with the bad. Like if it were a bad review, is it really bad, or did the individual just not understand what they were getting themselves into? Did somebody overpromise and underdeliver for them? I never do. I always give you everything straight the way it should be, and I always give you the right information to make sure you make the best decision possible for your business. Not in my best interest at heart. I have your best interest at heart, and I want you to make sure you have all the value. And that's why this channel, my blog, and everywhere else has created a lot of momentum, because I lead in with helping you understand all these different types of services, not just the ones that Uplyft Capital provides you with. So we'll get into the services here in just a moment. You can see what you qualify for. We'll go through the application in a moment. But up here, if we went over to services, you can see direct funding programs and business funding marketplace. And what I want you to be careful about, even if it's a legitimate platform to get into, like online marketplaces and even on the direct lender side, you have to be careful to go to a direct lender, because you won't always get approved. And if you were to get approved, you won't probably get the best benefits, early payment discounts, prepayment penalties. Are they there? Are they not? Are you getting the best rates? Are they tailored for your industry specifically? How well do they know your industry is another question. And there are a lot more things that come up where you get more flexibility if you didn't go to a direct lender in all cases. You went through this brokerage or perhaps an online marketplace. Online marketplaces can look at you from multiple lenders and providers and then say, hey, this is the best one. And as opposed to somebody who's going to give you less, like let's say they gave you an example of 30,000, and then one other lender then ends up giving you 100,000. That's a significant difference. But because you thought it was best to go here, but it was better to go there, you wanted more. They probably had the same terms or rates, or more or less, but that made more sense to you. But you also have to be careful with online marketplaces, because you have to question, how are they protecting my information? Is it privacy protected? Are they taking it and then shooting out to multiple lenders? Then I'm getting multiple inquiries. That doesn't always happen. It's not the case here, but you just have to be careful of that. And I'm always protective of that, and people that I help, because there's a better way of looking at it. There are online marketplaces who will just take your information, shop it around. I'm not saying that they don't completely. I mean, there are things possibly on the back end, but you have to be careful about how they give that information off to different lenders. And if those lenders are giving that opportunity to look at your file, are they even the best ones? That's the other question you have to ask. Have they been vetted? Have they been doing this for some time? Do they understand your industry and your situation, your current use of funds, and all these things? And that's not always a yes. So I'll leave you my recommended program down below and how to get in touch and what I recommend. I vetted all the lenders out there that are actually very helpful, that will protect your privacy, whether it's a direct lender or indirect through a brokerage, which I recommend a lot of the times. And we vetted those who are the best for A tier, B, C, D plus tier type of lenders, and which is actually going to get you the most maximum exposure and help you and without hurting you. So I'll link more information down below on one of my #1 recommended places to get into. If not there, check out the questionnaire to get started. Now, we're in this, you're going to see funding options for your business's goals, and they offer a full suite of program types. So this is kind of what makes them a bit unique in a sense, but it's kind of a marketing point, to be honest with you. And what it is, it's breaking up like, hey, here's our premium plus of 500K. Here's our premier program of 250K or so, our standard, and then our starter pack. It's kind of like just showing you, hey, we have multiple services, which they do, but not every company markets themselves like this. And they're just trying to break down that, hey, you can fall into each and or category of this service. And as you grow, you possibly end up getting more and going up higher, which is smart. I'm being very honest. And it's not like other lenders and brokerages don't operate that way, because they do. They just won't show you this. And it's like, well, if you're an A tier client, then you're perhaps a premier plus client. If you're a B tier, you're possibly a premier client, or you're probably an A tier client, but you're doing this amount in revenue. And this other A tier client is doing more. They have better details. So they're a premier plus client. So it's all when one the same. It's just the way that it is, I guess, presented to you. So you have to just understand that. Explore our programs. Easy, flexible, and fast to keep you growing. We understand not every business is the same. So there's each and every business owner has a different growth opportunity. Depends on what you need to use those funds for. And every business we fund receives their own personalized offer that is created to meet their specific business needs. Our business funding of solutions range from 30,000 to 150,000. Our funding specialist will be able to assist you with all of your questions and concerns. They can help determine which program could be best for you, how much you would qualify for, and there is absolutely no obligation, no hidden costs, no application fees, and all that. Like you probably see everywhere else. And if you see a lot of that, run. Now, we're going into the starter program. And like I said, what they focused on in the very beginning were merchant cash advances. And then they grew into like term loans, lines of credit, perhaps the SBA loans and more. But what you have to understand is that a merchant cash advance, how it operates, it's based on your future receivables or what you're making in future sales. Then the merchant or the lender takes a future percentage of what you're making. It can be fixed, it can sometimes be variable, so it can fluctuate, or sometimes it is fixed and you know what you're getting taken out of your account, which I usually recommend it's best. And these are usually on a remittance of daily and or weekly, not monthly, because a lot of people go into defaults, they end up in collections, and it's not necessary to do that. It doesn't make sense. It's been a pattern in the past, so it's daily or weekly. And if you're wondering, how do I get a monthly repayment? I've created content for you. I'll link you to down below, but it's not always like you need a monthly repayment. What you have to think about is how much are you taking on? You already have credit cards, rent, all these things. So you're going to add an additional 3 to 5 thousand plus more on top of that. So now you're paying 15 to 20,000 in total. You're just going to hurt yourself. You're going to likely default, close your business checking account, and you're going to say, it wasn't my fault. You don't want to be in that situation. So in a lot of cases, the daily, weekly repayment makes most sense, especially if you're cash flow positive, and you will continue to be, and you can project that. That's why you have to understand the risk you're taking. And then secondly, the ROI potential in terms of the relationship, in terms of the activities you create in your business. So, for example, and there's also return on your investment financially. So, what I mean by that is, what is the activity? Marketing and advertising. So, what is my return on my investment in that? Do I know what it is? If I don't know what that is, and I'm looking for funding for marketing and advertising, and you're thinking, you're projecting that this is what you'll be, but there's no actual evidence of that, like amounting that, that's where you can lead into. It'll be more difficult for you if you're just looking at theory and you're just looking at things that won't work economically. But if you're an individual who said, I put $1 in, got $3 out of my marketing, and then I need more inventory for this on my shelf and so forth, because this is what it's going to give me a return on my investment, there's a pattern behind it, then it makes most sense. And you're going to say, I'm going to double, triple, quadruple even my money, or just stay stable and afloat, as opposed to going backwards. So you really have to invest this into growth and expansion. Yes, it can be used for like payroll and debt consolidation. Usually you can use up to 50% of your funds for debt consolidation in a lot of cases. So just be aware of these things. And it's not necessarily for everybody. You may be more of a qualified applicant who needs a monthly repayment, and it makes sense. Or you have to start somewhere, daily and or weekly. You probably start off daily, or you probably start off weekly, but you build up, and I can show you that roadmap. With me, I'm going to help you get to where you need to get to eventually. If it's an SBA loan, if you didn't get there already, I'm going to show you the parameters. So you see the starter program, 8 to 30K they're offered, terms of 2 to 5 months. And you're now thinking, whoa, that's pretty low, but you're a starter. You're just getting started. Perhaps you have no experience getting any kind of a merchant cash advance, lines of credits, or any other type of financing, or you have before, but you show us a history where we can't really trust you. You're too high of a risk. And to a degree we can, but because you've been here, done that, it's just your revenue isn't enough, your FICO credit score, even if they don't usually do, if they wouldn't do a credit score check. In a lot of cases, what you have to look at is when they say that, it sounds like an attractive piece, but at the same time, you want to have one, at least 500 and above. If you go below that, they may still consider you at a 450, 480 or so, but even less. But still, at the same time, that's why a lot of those individuals end up in collections and end up defaulting, because they can't make the repayments. They're already fluctuating so badly with their credit. They're not stable already with cash flow. So even if that's said, be very careful of that. You can see requirements of 10K and even 12K per month in revenue you should be generating. And I know a lot of you may have just dropped like flies there. So if you're looking for an alternative where you're not doing 10K to 12K, look down below in the description where I'll show you lender and other opportunities where you can get in with just 3,000 or even 5,000 a month. And if you're doing less than 5, less than 3K, and you're perhaps a starter or you've been established for some time, just not generating revenue, I'll show you those alternatives too. Now, rate 1.4, what this is a factor rate, or you can call it a total payback. It's not exactly an interest rate. It's not an interest rate's not amortized that way as like the banks do it. It's based on your future receivables and what you're making. So, for example, you get an offer of 20K, and then they give you a rate of 1.4. That could be looked at as in a way 40% interest. on top of closing costs. Maybe there's a broker fee, et cetera. It might be at a 1.43, 1.45 in some cases. So 1.45 times the 20,000 is what you're expecting to pay back in total repayment. So if we did those numbers, I already have it here, but I'm going to do a few more. So if we did 1.45 times the 20,000 that you received at this starter program, then you're paying back 29,000 on 20,000 in 2 to 5 months. And we assess your risk on the term based off of it could be credit because it should be. Even if it's not a credit requirement, they may not look at that entirely, but I would be, and I would very well be cautious as as lenders always look at it and go, well, your term is usually dependent on as well as your credit profile. Why would we give you the maximum amount of 5 months? But it's already kind of calculated that way. That's why they kind of give you that term because they have that from previous history and pattern. So 29,000, you're paying off that in 5 months, let's say. So let's say they calculated by a 20-day for every single month. And I know it can be 20, 21, 22. It depends on the average and as well as what each lender will look at. But 20 days is actually very well because you pay less instead of the 21, 22, you actually pay a little bit more in most cases. So 29,000, you divided that by the 100 days, you're looking at a payment of about $290 per day for the next 5 months. And there are possibly early payment discounts, no prepayment penalties and this, but you want to make sure you have a business checking account at the end of the day. If you're operating personal for your business, there is an alternative, but you won't get as much. You'll usually get between 20 to 25% of your average monthly revenue or your monthly revenue, monthly sales. And it seems to be the case that everywhere. And if you have a business checking account, but you're doing less than 10,000, look down below. And if you're doing above 10K, perhaps 15K and above, I have other recommended programs that I'll try to link you to down in the description. So 290, and that's keeping it fairly simple. That's what it could look like at 5 months. But if you had less, you just have to understand your cash flow. Understand if I take this 20,000 and I'm paying back 29,000 and I have 5 months to do it, I'm getting $290 taken out of my account. That makes up 450 per week. That then turns out to be about 5,800 per month. Can I afford to take that out daily if it's not a percentage that fluctuates, or if it's a set percentage of your daily? When you make more, you get more taken out, less, you get less taken out, or is it fixed? And so 5,800, well, that 20,000, I'm going to turn it into 40,000. I'm going to turn it into 30,000. So that 29,000 then becomes a 30,000 or your 40,000. And so it doesn't seem so much like a big number, does it? So it's more about that growth and expansion as opposed to looking at it and saying, because it is expensive, it's supposed to be medium to higher rates with this unsecured financing. You don't put collateral up, but if you have collateral or you can qualify for SBA loans or a longer term, then that's fine. But if you don't start that way, you got to build up there. Now, renewal, yes, as you can see, requirements, driver's license, voided check, proof of ownership, bank validation, deposited within 1 to 2 days. Now let's move up into the standard program. I know I spoke quite a bit, but it's very useful information that you should have. Standard program, 5 to 125K terms. Now we go a little bit higher, 2 to 7 months. Rate, 1.34. Now we go a little bit lower. Why? Because you perhaps have more revenue, more cash flow. Your average daily bank balances look better. Non-sufficient funds aren't existent, or there are very little to minimum to none. Negative days, overdrafts, bounce checks, chargebacks, etc. And there's a little bit more graphs with credit score if it's something that's brought in, and time in business, industry specific, everything more. Now, renewal, yes, requirements similar. You're seeing there on the side. Premier program, 10K to 250K. Now you're getting terms of 3 to 8 months. We're still kind of in that cash advance 2 to about 8 months. Usually you see with cash advances, but nowadays it's kind of been like 2 to 11 months. Once you get to 12 to 24 months, yes, those could be considered cash advances depending on the lender programs. And then you have term loans. Those get into more of an intermediate and then even more longer terms. Term 3 to 8 months, rate 1.3, so it's come down. And then renewal, yes. So requirements, you can see that there. Premier Plus, 30K to 500K, 3 to 12 months. Now we're getting a little bit more of an extended term. You're getting more funding possibly. Perhaps you didn't start there and perhaps you grew into that. Rate 1.24. You can look at that at about 24%. And a lot of people would think that's, yeah, it's not supposed to be inexpensive, but you don't have collateral. You don't qualify for these other monthly term options. And even if you did, those are unsecured and you're looking at 1 to 3% interest per month. So what does it make sense for you to do? get that return on your investment as soon as possible, but also you can also do it in the longer term if we give you more terms, longer terms, or you move into that. You get an SBA loan, perhaps you didn't need to use all that money as soon as possible. That's why you were looking for that option. So when you didn't qualify for it, we got you a lump sum of 500 to 600,000 in unsecured term loan, and on top of that, perhaps a line of credit. But you didn't want the unsecured term loan because you were only given between 1 to 2 years or up to maximum 3 years. Maybe it was a bank term loan where you were given 2, 5, 7 years, etc. But you were like, I don't want to use it because I don't want to pay all of this off in that allotted amount of time. Or perhaps you started with less and say, yeah, I'll start out with 50,000 and then I'll work my way up. That's another alternative to look at. So you see that 12 months, 1.24 renewal, yes, and so forth. So that's what you're seeing there with these programs. And you can see your business. Sorry, I have an HP lighting screen. I don't know if you guys have that on your computer. Uh, it's a fairly new computer, and I've been trying to find a way to work around it, but I also haven't had the time to look through that. But I have it as a ring open. You perhaps can't see it, so it sometimes blocks my view from what I can see. And I have to exit out sometimes. Your business scoring model, background, of course, that's part of the underwriting process, like any. And then a lot of lenders and a lot of applicants will go through that at the end stages in most cases, where they'll say, hey, we have you with an offer here, but our background check came through. There are some legal issues. We don't tolerate any of that, even if it's been 3, 5 years. Or we do, and we go, well, you have great revenue. You're up there. You've been proven to do this. Perhaps you've done this in the past, so we'll work with you. Just be very careful about these kind of things. Location matters, credit. They say they don't. In cases, they may not check for credit. And a lot of cases, they will. It just depends on circumstances and outliers as well. Non-sufficient funds, that's short for NSFs, FICO credit score, time in business. So a lot of the times pulled from FICO, you're seeing Experian. A lot of the times you'll see multiple 3 credit bureaus, not only with here, if so, but because it depends on the lender and what they want to see and how extensively they need to look at those personal credit reports. Other types of products and services like the unsecured term loans and lines of credit, a lot of people, they don't qualify for them because they don't have existing business credit established. And you shouldn't just build it with Dun and Bradstreet, excuse me, but you should have it set up with the other two and be able to have some accounts reporting trade lines that you're actively building it. But if you don't have that, not every lender looks at all 3, but they will look more at that and compare that with personal credit and see if you have any credit worthiness. And what's happening with your credit. Do you have negative trade lines reporting, late payments? Because they won't prove you for this. Maybe you're shopping around and accidentally somebody sent your information, your social security number to 10 different places, soft pulls. Perhaps there was a hard pull you weren't told, or this was what happened. That can completely knock you off, and have people who go through these things. That's why it's important. You just don't apply anywhere and everywhere. Be very careful of where you're going and where you're turning to. But if you want to work with somebody who knows their stuff, who you'll be protected at the end of the day, I'm looking out for your long-term success, then look for my information down below and I will help you. That's why you don't just want to come here and even apply just to apply. Be very careful. Time in business, ending bank balances matter. Ownership percentage, open positions, like how many cash advance lines of credit positions, etc. Payment history, seasonality of your business. So if you're a business who's just generating 10,000 in this month, but you didn't generate 10,000, you only generated 5,000 the next month, and then you consistently did that because of seasonality issues or other reasons, it's hard to get financing. So you want to be consistently doing that 10K and or 120K or 12K per month and not having too much fluctuation where you're like 12K, then you're at 5K, then you're at 6K, because that a lot of the times won't work. If they're looking at the most 3 recent months or 3 to 6 months or so, that'll be a determination of it. Over here, again, the HP lighting is in my way. So time in business and personal credit history and a few other things and other components, entity type, payment history. Our team is here to guide you, an option for every business. As you can see there, you can explore the program, see what you qualify for. Now let's come up here to the business funding marketplace. Uplyft Capital, short-term business loans, powerful partnerships. You see that their services, as I mentioned earlier, the merchant cash advance, you're basing it off your future receivables, your future sales, what you're using in credit card. If you're taking credit card processing, you're taking credit card statements, credit cards from your clients. So see how we work that backwards, kind of reverse engineer from the top to bottom. But there are hybrid cash advances out there where it's not just based on credit card receipts and those kinds of transactions. It can be cash, ACH, checks. And if you're looking for a hybrid that I recommend most of the time is what I would do, then look down below in the description as my better alternative to a traditional merchant cash advance. It actually saves you a lot too, usually 50% a lot of the time because you don't see fluctuations or you're not giving this a huge amount. You know what's getting taken out of your account. You can build up, and these are very trustworthy lenders and providers you can work with. Lines of credit, like I said, again, it can be hard to get one, but it's a revolving line where let's say you get approved for 20,000, then you only want to use 5,000 one month. You can do so, and you only pay interest on that amount. There's a withdrawal fee. You see balance fees and all these different issues, not issues, but all these different components to it. And it could be an issue if you're somebody who's like, well, I don't want to pay that interest, but it keeps your payments lower than you see getting a lump sum, but you get approved for less. So there are cases where we can bundle the two, like a cash advance with a line of credit, a term loan with a line of credit, or just by themselves. And or you got a line of credit and you got an SBA loan, we can consolidate that, put it underneath one, and you move up. Or you can keep them separate, or what you want to do with that as you may. You use it as you want. So traditional bank loans, 401k business financing. This is an amazing option, especially if you're a startup business owner. And as being a past employee who you've worked under, there's also out there IRA financing. And this is where you can use your 401k to start up that business that you have, or if it's not a startup, continue to push capital into your business that way from other employers and other ways. And you're basically paying interest to yourself. I don't want to confuse you with that, but it's a great option if you want to look into your 401k, unless you're like, no, I'm trying to save that for later, or later is now. It's time for me to actually take that step. Then I'll leave more information for you down below in the descriptions for you to learn about this. But you see, if we click this button, this is a great option too to look at for 401k financing. And I'm going to move this HP lighting, so I apologize if it gets dark here. This way I can see the actual screen. Loan amount, 50K up to. Financing speed, 1 week minimum. Interest rates, none. You're paying yourself first. Builds credit. No, and that's what I spoke about with the interest. Must be employed, and it goes a little bit deeper that I can get into with you later. Must be employed, yes. Good for funding side gigs, sole proprietors, independent contractors in cases. So Uber, Lyft, there's a lot of different ways to do this. 401k business financing. These are loans that are taken out based on the amount you have in your 401k. Usually you can borrow a maximum of 50% of the value of your 401k, or 50,000 in this sense, whichever is less. These types of loans charge interest. However, since you're borrowing from your retirement plan, you're actually paying the principal and interest back to yourself, and you'll get more of that. The important thing about 401k financing is that you have to keep your job so you can have continued control and access over your 401k. So that's the other component to that. You may look at that as a con. For this reason, it isn't recommended that entrepreneurs use this loan unless they intend to start a side gig, business owners included as well, and so on, and much more. You can see a little bit more information. It features amount minimum 10,000 to max 50% of the value of your 401k, or 50,000, whichever is smaller. Interest rate 0%. Loan terms varies depending on that market, except and what you have on the table to come with. So no, they are not reported to the credit bureaus. What happens if you default? Usually it's very hard to default on one of these loans because you're almost always deducted directly from your paycheck. However, if you do, you'll be taxed on the outstanding balance as income, including an early withdrawal penalty if you are not at least the age of 59 and a half. So that's what you have with the 401k. And there's more we can go into, but you can see some of the pros there. And I'll quickly just have you look at this because I'm going to move over to the next topic. Now, coming back here, we already went through the MCAs more or less. And again, all information will be down below, but I would encourage you to continue watching this so you can get more information. So merchant cash advance, typically up to $1 million to keep your business moving forward. So you're seeing here 10K to 1 million. So even if it's up to 500, up to 1 million, as they grow, they may have more or less. As low as 10%, 24 hours, up to 10 years. And you're seeing more of a factor rate. They say 10%. I mean, that's with having exceptional details usually, but you're seeing those factor rates of 1.3, 1.25 or less. Sometimes you can get into 15%. 10% is kind of giving it like a huge reach. Unless you're like cash flowing heavily, you have huge revenue, you have high gross revenue and sales. Like, don't always expect to get 10 to 50% with a lot of merchant cash advances. It's typically 19 to 50%, if not 19 to 70% more or less, depending on your risk 24 hours, up to 2 years minimum, no credit check. They say that, but I would say, credit is a factor. A lot of these use cases, benefits, seize new opportunities, shore up inventory, operate seasonality, handle unexpected rises, pre-qualifications, provide 3 months of past bank statements or receivables, fill out the super simple cash advance application, where you can typically skip with paperwork, amount of it, credit pulls, your business's previous collateral is not something that we'll look at. So back over here, lines of credit. I won't try to, I'm going to go through this rather quickly. 8K, 4 hours, 4.66%, 12 months, 600 credit score, low to get started. Business lines of credit, amounts of 1,000 to 250,000. Minimum monthly revenue 8K. So that's an advantage to it. Other places you'd see 10K, 15K. But even when they're asking for more revenue, you have to understand that with higher revenue, usually opens up doors to higher tier lenders. The higher tier lenders always love working with people who have higher revenue, who have higher annual gross sales. And it's not all the time, but they see that as a better way of return on their investment in the personal level as well as in business. And I see that as well. But I work with all varieties. Now, interest rates, loan terms, 3 months to 7 years, repayment options, they are monthly. And then you can see what you qualify for there. And you can see pros and cons, can be expensive. Initially, limits can be fairly low as you start off with. So it can kind of be in a way, not like exactly credit cards, personal and business. Sometimes you may have to start with less. Traditional bank loans, you see that disaster relief loans, hard money business loans, SBA financing, equipment financing, invoice financing. And I have a lot of lenders, direct and indirect lenders for SBA loan options that I'll link you to down below, the ones that I recommend most that I've worked with. Not to say that they're not somebody you want to work with because they do well as well, but I've been doing this for such a long time and I know what's best out there for every industry. So loan amounts from 8K to 350K. Usually you can see these being partially with like express loans, cap line programs, or line of credit programs, exports, express loans, etc. But 2 to 6 weeks financing speed, interest rates 2.25 to 2.75%. I mean, that's kind of relatively putting it low, but it could be possible. It's just you're seeing prime rates right now at 5.5 and you're expecting that interest rate to come up. There's been an update. So by the time you're watching this, that 5.5 could be up now. And plus 2.75% is usually where you get an SBA loan. So around 7.5 to 9.5, if not more, when it's more of a variable interest, not fixed, which you see a lot of it these days because of market fluctuations. Time in business, 2 years minimum, good credit score. Usually you want to see 680. Sometimes with these lower amounts, 650 can work, but there's a lot of other things we have to look at. You have to have your business credit as well, overweigh that, and there's other circumstances. SBA loans, features, you see that depending on whether the loan matures before or after 7 years and on the kind of loan. So sometimes they give you up to 10 years and then the interest rate will be a little bit higher, but it all works out anyways because of the term length. And sometimes they may be less, but it's kind of far-fetched to see these. It could happen, but it's not always possible. Even bank rates, like they're not that low. Sometimes they're willing to, but where they start off at prime rate. Loan term varies, repayment flat, monthly payments. Now let's come back up here and we'll close up shop. Invoice financing. So if you have a form of open invoices and you want to give that up to an invoice factoring company, that's something that I can help you with. I service all of these products and more. I've helped out, again, like I said, a lot of businesses get the right types of line of credits, cash advances, traditional bank term loans, online, SBA related, 401k, disaster relief loans, equipment, invoice, SBA, and a lot more. So I will help you. We'll be in the best of hands. We're going to close up here. I don't think I missed anything. Resources, services, we saw that. The business funding marketplace, we saw there. The application, we can click here. It might bring you to this page more or less. If we click on beauty salon funding, this is again another way of like them segmenting where you come through, and it's more of an attraction piece. But a lot of marketplaces or brokerages or direct lenders will have all of this, so it's okay if they don't. It could be a lot of the times a market, but it also helps them segment. So let's say beauty salon funding, you can click here and then it'll bring you to hopefully the page that comes up. It may take a second to load. There it is. And then desired amount, maybe you put in here 250,000. Just understand this. Different types of programs, the different types of lenders that could be looking at your details, and just be very careful about who you're going to. And at the same time, you only get approved between 10 to 15% of your annual gross sales, if not up to 20%. In this market, we're looking at 10 to 15%, if not 10 to 12%. With exceptional details, yeah, you can get closer to 15, if not closer to 20%. But If you're expecting to get 250,000, but you're only doing the minimum of 10,000 a month, even if you don't check credit, but your credit is bad, or if it's good, 10,000, you might get up to 75% of that. You might be getting up to 20 to 25%, 50 to 100% of that, 50 to 150, 50 to 200%. But don't expect you to get 250,000 to begin with. We'll just say 250,000 there. You got to start somewhere and build up. Perhaps it's this program on top of a personal loan if you have good credit. Personal loans, I have other lenders and what I recommend on what you should do there, but you should have a 680, if not a 700 plus credit with 5+ trade lines built. We just look at annual revenue as pay stubs and or tax returns, etc. And we can base that off. And you can add this on top of that, perhaps, or a line of credit, installment loan. Perhaps you have another option. Maybe you're purchasing a business and you're trying to do things in a way where you can't get qualified for an SBA. There are alternatives. What does your business do? I mean, we did this along one, right? Why are they asking me, does my business do? So it's all pretty much the same. So they're just kind of trying to get a sense of where you're clicking, what kind of business you are, what kind of business they're getting. They're collecting that data so they can use it. Smart. Now, business start day, you want to do all that. Let's just say 3/5/2020 credit score. Have you select what amount? I'm just going to go through this rather quickly. Monthly deposits, 3,000. Check eligibility. Congratulations, you qualify for our personal loan program. So with that sense, they'll send you to that. But again, be very careful about these kinds of things where you're going to online marketplaces. Perhaps they do work with direct lenders, yes, but you want a better idea before you're giving people your information. That at the end of the day is what's most important. It's not even when you get an offer. It's when you put your information into someone, because I've released content on those things called trigger leads and syndication where you apply with somebody and then they third party shop. Not saying they do, they may, and they spread it across different lenders. Well, those lenders aren't the best. So those lenders will then try to contact you, hold you to them, where they can't release that information to somebody else. If I'm trying to work with you with somebody else, and now somebody has to speak to their account manager. And then there are other companies who are trying to scam you. They're telling you can get this much, just sign the contracts, send us the 3 months of bank statements, start the application, sign these contracts, etc. Be very, very careful of that you're not doing this. Or 150 million funded. You can see that easy sign up. Just some more Paulson and Joe, best of the best. I got better. I asked for it. But that's what it is right there. And you can click here. And then they'll send you to here where you can go ahead and get in partnership with. And Giggle Finance is a great one. That's one that I actually work with myself. And they're one that I recommend. And I did a review on Giggle, so I'll link you to them down below and the best flexibility and the best route that I recommend you do this, where you get more benefits, as in like flexibility, partnership. So that's why you have to be understanding of how these things work. Not just applying directly is always the best thing, or indirectly is best in a lot of senses where it isn't in other cases. So I have a review down below in the description with Giggle Finance that I'll link you to, as well as other things, and so you can view more of that. But that's where they're sending it to, that lender, etc. Over here, there are more solutions. Let's go to the very beginning and see if we click apply here. It'll bring you to a similar page, so you'll look at the same thing. Go to Trustpilot, click there, where they have a 4.8 reviews. So take these with a grain of salt, but you also want to see like average. There weren't any. Why were there not? So let's look at the poor, less than 1%, which is good. Just depends on how long, the business has been around. So you have to also look at all that. They only get 2 stars because they were fast and helpful, but I didn't like the unexpected fee that was charged by a third party. See, that's what I'm saying. Like, you have to be careful. Like with me, even if you go through a brokerage, I have those direct lender partnerships already for the most part, and they've been vetted. They're the best A, B, C tier plus lenders, and there's more of that. And the fees are there's fees included at the end, just so you know, with any kind of service. Some may offer more of a higher fee. You have to be careful about. Other ones that are not private lenders who are just basing it off of fees but not interest, but those fees accumulate faster than interest. And so, yeah, you'll see fees like merchant cash advances or lines of credit, etc., where maybe between 500 to 3,000 or more or less. Maybe you get 1,400, maybe you get 2,000. That's fine. That's going to probably be taking off the 50,000 that you were approved for. You probably get 48,000. That's okay. That's what happens with this That's how banks make money, or that's how lenders make money as well. But they also make money on other ways, and it's expected to happen out there. I wouldn't have had a problem with the fees, but I didn't like what they were that they were hidden and unexpected. And that's another sense. Like with me, you'll get the understanding with the right lenders of what are the expected fees, 4%, 3%. Now, how does that add up towards the overall amount? The only thing I had agreed with too was the interest, I think they said here, but they put interest. They were charging and a withdrawal fee, but not a random third fee with no explanation. So see how that's accumulating. You have to be careful. Perhaps they weren't aware of that. Maybe they weren't told, or they were, but they just didn't understand it. A lot of companies, they don't tell you that up front. You'll see that with a lot of online marketplaces as well, and even some direct lenders. But I'll just leave it at that. I've given you enough information to go off of, more than probably wanted to hear about, but it's very important that you understand what is Uplyft Capital. I was going to say capital, and how they exactly work, and how they work directly and indirectly, how maybe they're not the best for you, and what I actually recommend down below. I'll leave you more information as well as that questionnaire to get started with. And if you have any questions, please feel free to reach out to me. See, there's information there. But myself, I'm going to have my info in the description to get started that questionnaire. If you got value out of this, please give it a thumbs up. Share it with others who you feel will get value out of it. Most importantly, that they can rest their head at the end of the night when they go to bed, consciously, subconsciously, throughout the night. They don't have to wake up or have a nightmare of what they will wake up to, and the reality that they can't move forward, they don't have the right education. But those who do wake up nice, peacefully, and calm can then say, hey, now I know what to do. Or, hey, this person is helping me with an education, instead of just slamming the product down my throat and telling me go and apply for my benefit. That's not the case here. I'm doing this all for you, so you can benefit this at the end of the day and move forward in the right direction you need to go into. And if you haven't subscribed, please go ahead and do so, and click that bell notification icon so you do not miss any future videos I will be coming out with. That's it for now. Talk soon.